Good morning, everybody. This is Billy Williams, President of Inspire Nation Business Mentoring. I appreciate you being here today. Today's training is on how to buy and sell a PNC insurance agency, questions most buyers and sellers don't ask. A little bit about me before we get started. Again, I'm Billy Williams. I'm President of Inspire Nation Business Mentoring. We have hundreds of member agents. I'm also President of Williams Family Agency Investment Group. Currently, we have 23 business partner agencies, and we produce about $360 million in earned premium annually. I'm a proud military veteran. I retired as Station Commander of Army College Recruiting. I'm also a former all-state market business consultant and exclusive agent. Of course, now, as an actual owner of agencies, I mentor many of the top producing agents and agencies in the country. Let's go over our training outline. I'm going to talk about a legal disclaimer, ask you a poll question. We'll talk about factors that help determine the sales multiple. We'll also look at major book of business reports that you should acquire before agreeing to the purchase or to the sale. We'll talk about technology, labor, and training points, tax implications. After the sale, what are some retention tips that you can put in place to make sure you're keeping that book of business that you bought? We'll talk about locating funding for your purchase, and then I'll take some questions and answers. Now, because this is a pre-recorded, the questions and answers and the poll question will not be a part of this training. Let me give you my legal disclaimer. The information presented in this training is based on the research of Inspire Nation Business Mentoring, as well as the opinions and personal experiences of Billy R. Williams, Ph.D., President of Inspire Nation Business Mentoring. The information presented is in no way intended as legal or tax advice. Before purchasing an agency, you should always seek the advice of an accountant, a tax attorney, and an attorney that specializes in contract negotiations. Always have to get that legal stuff out the way so people won't come back and say, well, you said. Yep, I said it because that's my experience. Let's get into some good training though. Let's talk about factors that help determine the sales multiple. This is very important. As we talk about buying an agency, you have to make the determination, do I want this to be 1.5, 2.5 of commission based, 3 times commission based? What is it that I want? We call that the actual multiple. Well, there are 8 things that we recommend that you look at. Of course, there are other things, but these are 8 things that most people don't ask about. So we want to make sure we're discussing those things. 1, customer reports. 2, carrier reports. 3, commission reports. 4, line of business reports. 5, technology integration and cost. 6, additional labor cost. And when we say labor cost, we're talking about labor, benefits, and training. 7, tax implications. And then 8, sales and retention variables, X dates, prospect list, expected rate increases or decreases. The better the reports, the higher the multiple. Right now, today is July 1st, 2011. Right now, 3 times commission for a great book of business is about the high end. I know there are folks out there paying 4 and 5. I think that's crazy, but there are folks that are doing it. But if you got a really good book and you, as we go through these reports and you look at these reports and say, wow, this is a really good agency, right now, 3 times commission for a great book of business is the current high end of the market. All right, let's go ahead and get started on some of these reports. Let's take a look at this. Agency customer report. The first thing I always tell an agency, and the first thing we always do, is we pull a spreadsheet by customer. Now, it's real important that that spreadsheet have the following columns: first name, last name, date of birth, age, policy type, line number, carrier, annual premium, commission, initial start date, renewal date, city, state, and zip code. If you get these columns, this spreadsheet allows you to sort information into multiple reports, which you'll use to determine the overall value, stability, growth, and retention potential of that agency. Guys, I'm telling you, get this report. Now, I know there are a lot of agencies and a lot of technology and a lot of software that make it difficult for you to pull this type of report. If you have to piece together 4 or 5 different pieces of information in order to finish this one spreadsheet, do it. It is so worth it. First name, last name, date of birth, age, policy type, line number, carrier, annual premium, commission, initial start date, renewal date, city, state, zip. So what does that look like? Let me go ahead and switch over here and I'll show you. This is an example of what that spreadsheet would look like. Again, it's just a spreadsheet. Usually you can pull it out of report of, if you're using Applied or one of these other systems or Hawksoft or whatever customer management or agency management tool you're using. Again, you may have to piece this together. Maybe it'll give you 5 or 6 of these columns, and then you'll have to pull another report to get the other 2 or 3 columns, and then you blend them together. If you're not sure how to blend this together, we've got spreadsheet training that's available for our members. First name, last name, date of birth, age, policy type, line number, carrier, annual premium, commission, initial start date, renewal date, city, state, zip. Okay, this is what that spreadsheet should look like. Now, what do we do with this spreadsheet once we have it? You assess the information, and I'll give you some examples of how you look at the information. Let's take age. What we do is we take this and we basically draw a line. We go all the way down. We say, how many of those customers are above age 50? And we draw a line there. And then we count the number. How many are below age 50? How many are above age 50? This helps us determine if this is a growth agency or a retention agency, and if that book of business is better suited for life and health insurance sales or for senior product sales. We use 50 as our cutoff. We know that by age 50, most people are not out shopping for life insurance. At this point, they're really planning for retirement. So we know anyone below age 50 is probably still in the market for life insurance or health insurance. Anyone above age 50, probably more in the market for senior products, where we're looking at annuities, we're looking at med subs, we're looking at some type of long-term care policy. And that's fine as long as I know what this book consists of. Growth agency versus retention agency. Usually if they're below age 50, and again, this is our experience, below age 50, there are other products that I can sell them. They're pretty much, I'm in a growth mode. Above age 50, they're pretty stable. They've probably been with me a while. They're not really shopping around as much as they used to. So that's more of a retention agency. And I'm okay either way as long as I know what I have, because it affects my staffing. If I've got a growth agency, then I need to have a more aggressive sales force. If I've got a retention or cash flow agency, then I can have more of a customer service force. So it helps me determine who I'm going to hire and what I should have in place. City. Are the majority of the policies centrally located? I've seen agents buy agencies where the policies were all over the state, and that's fine as long as your staff understands how to sell 4 or 5 hours away from your office. Some staff doesn't. They feel like if you're not down the street, they can't talk to you. Even though Geico has blown that whole idea out of the water, there's still staff that feels that way. Well, you need to know where the majority of these policies located. How will I service them? Is this going to be a walk-in customer policy review office, or is this going to be a call-out customer policy review office? Initial start date. Has that agency been consistently writing new business or mainly servicing existing clients? The initial start date of the policy tells me that. If 80% of those policies were started 5 years ago or later, then that just lets me know, okay, they're not really writing a lot of business. But if most of these policies were within the last 4 or 5 years, that tells me they got really aggressive the last 4 or 5 years. If it's consistent throughout, maybe they just write a certain amount of policies every year, I need to know that. It tells me a little bit more about the demographics of that community. Policies. How many policies does the average customer have on their profile? Again, makes a big difference. We're going to go into policies a little bit more and a little bit more in depth later in the training, but it makes a big difference for me to know that. This is examples of how you would look at that information. So if you get that spreadsheet together, you don't have to worry about this. You can split it into multiple reports. First report we're going to look at is the carrier report. A carrier report gives you the clear snapshot of the overall agency and carrier relationship. Information that I'm going to retrieve or acquire from the carrier report: total policies per carrier, total premium per carrier, total commissions by carrier, loss ratio by carrier, who are my underwriters by carrier and by line, are the companies admitted or non-admitted, what are the carrier production requirements, what are the retention report by carrier, how are they holding up. Guys, this is extremely important, especially if you're buying an independent agency. I know a lot of the training today, we've got captives that are paying attention to this training, and we've got independents that are paying attention to the training. Well, either way, if you're a captive company, then that means your carrier report is pretty much pulled for you because you really only deal with one company. But you still need to know, how much premium am I actually producing? How much in commission am I actually producing? What's the loss ratio? Another thing, even on the captive side, who are the underwriters for this line of business? Because the underwriters can give you a lot of information. You always want to talk to the underwriters of your main carriers, especially because they'll give you the underwriting guidelines. They'll let you know how the trailing documents and compliance. They'll tell you a little bit about the history in dealing with this agency, and they'll tell you about business projections, what's coming down the road, rate increases or decreases or underwriting changes. It's real important that you talk to your underwriters. If you're an independent, this is extremely important. Why? Because you may have 4 or 5 or 6 major companies that agency writes. Now, of course, you may have 25, 30 carriers, but we all know that you're really going to narrow that down to your top 5 or 6 carriers. That's pretty much who you write in. You'll pick 1 or 2 carriers per main product line, and that's who you write. Well, you want to know of these main carriers, what are the total policies? What's the total premium? What's the total commissions by carrier? I'm still amazed at this, that agents don't dig deeper into the actual commissions of the individual carriers. When you buy this agency, maybe your commission structure is not the same as the commission structure of the selling agent. You need to know that. Loss ratio. If you buy an agency and maybe this carrier is a great carrier and the agency is a great agency, but guess what? Maybe they're in a storm riddled location, or maybe there's an issue that's coming up where underwriting is getting ready to change because of their loss ratio. You need to be aware of that day one, what's going on. Admitted and non-admitted carriers. Again, there's some carriers that you're going to write for those specialty items, long haul truckers and things like that. And then there are going to be carriers that are just right there admitted carriers. You want to get an idea because based on the total commissions and the premiums on this book, you need to be able to split that and go, this is my admitted carriers. These are my non-admitted carriers. Because guess what? You may not have a specialist that can talk long haul trucking. Maybe you're just buying it and you expect to roll that into your current book of business, but because you're not bringing that specialist on board, some of your non-admitted premium may not travel with you. So you want to know that right up front. What are the production requirements? And trust me, most of the major carriers are starting to have production requirements. You want to get that up front, know what's going on. And then, of course, retention. Who's sticking around? It's great that this carrier is out there and they've got a lot of marketing and they've got all these wonderful ads. And so they're driving folks in the door, but are those folks sticking around? You want to know that as well. Also, for the agency, it lets you know which of those customers have really been serviced. So if I'm writing MetLife as an example, and I'm writing Travelers, and my Travelers book is 80% and my MetLife book is 92%, there's a reason that there's that big disparity. I need to know what's going on and why that retention report by carrier is so different. So again, carrier report, extremely important. Going back over to our spreadsheet, guys, if you fill out the spreadsheet the way I ask you to, this is pretty simple. It's a really easy report to run. Let me show you again. If you notice on our spreadsheet here, I've got carrier information, I've got annual premium, I've got commission. So all you'd have to do is run a custom sort. For those of you that maybe have never seen a custom sort, let me go ahead and show you. You would highlight your entire spreadsheet just by clicking on that box up in the top left corner there. You go over to sort, custom sort. You can sort by carrier, and then you can add another level. You want to sort by carrier, and then maybe you want to sort by annual premium. And then you can add another level, and then you can sort by commission. And so once you do all this one report, once you click OK, of course we don't have enough information here for you to really see the difference, but let's go ahead and put it here. Once you click OK, it actually breaks it down by carrier, by commission, in the order that you want it. So again, real important that you understand how to go ahead and do that for yourself. That's your carrier report. Some important points to think about when you're dealing with your carrier report. First of all, who are the major carriers in the agency? Second, will the new agent be assigned and appointed because of the purchase, or will they have to be appointed? A lot of folks don't realize this. They think, oh, I'm just going to buy this agency, and heaven forbid there's something in your background or there's something with experience that the carrier says, you know what, we don't think you're well qualified or well equipped to actually carry our product. So you need to know that up front. Will the new agent be assigned an appointment because of the purchase, or will they have to be appointed? If you're already appointed with the carrier, can that purchase book of business be rolled into the existing book? Again, that agent that you're buying might have a different contract or might have a different commission structure, or maybe they're on contingent, enhanced, or you just never know. You always want to know up front. So of course you got to speak to the representatives from the carriers and say, here's what I have, here's the situation, how are we going to work this out? Are there any pricing or underwriting guideline changes coming down the pipe? I've seen so many agents that will go and buy a book of business. One of the things I've learned in doing this, and trust me, I've made hundreds of thousands of dollars in mistakes. One of the things I've learned is people sell for a reason, and I need to figure out why they're selling. So if I'm looking at a book and it looks like, wow, this is really good, something's just not right, this is too good. If it's too good to be true, it probably isn't true. I've seen agents that see, they're getting ready to get rid of all the homeowners product, or they're getting ready to raise all the rates, or they're getting ready to stop writing this product, and they jump ship. And then here you come along, and they see you coming. Next thing you know, you're buying a book of business that 50 or 60% of that book is gone. I had an agent when I was with Allstate. I had an agent that was in Illinois that bought a book of business that was primarily commercial. And wouldn't you know, not a year later, Allstate changed their commercial guidelines. So that book basically lost 60 or 70% of its value in a year. Again, guys, you got to know what's going on with the underwriting and pricing and all that's coming down the road. Can the current customers and policies be easily remarketed into another carrier if needed? I've seen situations where agents will go and buy a substandard book of business. Okay. Then they figure, well, we'll roll it into the progressives and the different carriers, and it doesn't work. So now you're stuck with the substandard product line that you really didn't want because you thought you could easily roll it into your book. You need to know up front by talking to the carriers, can the current customers and policies be easily remarketed into another carrier if needed? These are important things that you want to think about. Let's talk about your commission report. Now, of course, most agents know about the commission. I mean, that's why you buy the book to begin with, is you want to make sure you got that cash flow, you've got the commission, the growth potential. But let's break that commission report down a little bit deeper so that you're thinking about some things that you probably or may not have thought about. A commission report allows the potential purchasing agents to determine the agency's total commissions. You've got 9, 10, 11, 12 different carriers. A lot of times you'll see a number that looks good, but it may not be the actual commission. So we pull commission report by carrier. That's extremely important. Of course, you want to know your total commissions. You want to pull it by carrier. You also want to know, will the agency maintain any enhanced commissions once sold? Let's say this agent has been with this company a while, has been with this carrier a while, and so the carrier has worked up to a 17, 18, 19% commission structure. You come through the door, a brand new agent, no, you're not getting that. You're getting 12 or you're getting 14. So you've got to talk to those carriers and say, what is it going to be? Am I going to keep the same commission structure once sold? You want to know your commissions by line. What's your most profitable line, and is it in danger? Again, I told you about that situation about the commercial book of business. I've also seen it with the homeowners book of business, where an agent will go and buy homeowners book of business, or the agency primarily sells homeowners, and then the carriers start to pull out. That happens in Florida, happens in Texas, happens in California a lot, where the carrier will just say, you know what, we're not writing it anymore. Well, the agent knew what was coming, the selling agent knew what was coming, but the buying agent didn't. So now you buy a book of business that's 50 or 60% the value that you thought you were buying. So you have to know your commissions by line. You want to know your commissions by customer. Who are the agency's biggest customers commission-wise? What we try to do is we call it our Fab 50. So I will actually pull that report. I'll look at my top 50 customers by commission. Remember, the customers that's paying the most premium doesn't mean they're necessarily providing the most commission to the agency. So yes, I do want to know who my top premium customers are, but I also want to know who my top commission customers are. They may cross over, they may not. I want to know for certain. I call the Fab 50. Those are the ones that I need the selling agent to help me transition. Those are the ones I need them to introduce. I need them to stick around for about 90 to 180 days after I sell that agency, because those are the folks that I got to keep. Those are the ones that are driving the commissions in the agency. Always look at 12 months of commission statements for major carriers. Now, this will help you understand the agency's cash flow month by month. There are high commission months and there are low commission months. I'll give you a classic example, okay? Let's say we are buying an agency in January, and I look at the total commission for the agency, and it says $200,000. Well, that $200,000 is broken into 12 increments by carrier. Well, I need to know what those increments are. I could have months, and I've seen this many times, that you could have months where January is a $50,000 commission month, and February is a $70,000 commission month, and March is a $90,000. And of course, you're living high on the hog because you think, oh my God, I got all this money. And then April, May, June hits, and now all of a sudden it's a $20,000 commission month. And then July hits and it's a $12,000 commission month. And now you're freaking out because you got all these bills based on $50,000, $60,000, $70,000 a month commissions. And now you got $12,000 coming through the door. So if you didn't plan for that, man, it can really catch you with your pants down. That's why you need to break it down by carrier, and you need to know your commissions. And so you'll run that report. You'll piece it all together and say, by carrier for January, here's what I can expect. By February, here's what I can expect. And then you go through those 12 months. Now, if you're a captive guy, if you're one of the captive folks that's online, this is a little easier process for you because, again, you're dealing with one company. But you also need to know those 12 months of commission statements. You need those 12 months of commission statements. And I'm talking about 12 months. Don't go back to December 31st. It's July 1st now, and the person gives you 2010 from January through December. No, I want the last commission statement you received. That's what I need to see. And I'm going to take it 12-month moving. So I'm going to go back from July 1, 2010 through July 1, 2011. So I can see what's really going on right now. You're in danger of the exact same thing. You could have those high commission months and you could have those low commission months, and you need to know how those balance out. You also want to know what the agency's most profitable product line is. Just like we said a little bit earlier, when you talk about your lines or your different products that you have, what are the agency's most profitable product lines by commission? Very important that you know that as well. Maybe you got high premium auto, but you're only getting 7% on it. Whereas you got moderately premium priced GL or liability, and you're getting 17% on that. So I want to know what the agency's most profitable product line is by commission. Now, this report can be difficult for captive agents to acquire. That's why at a minimum, you look at 12 months of commission statements from the selling agent, starting with the most recent commission statement. For all state specific information, because I know we've got some Allstate folks that are online, want to remind you, all policies with an effective date prior to 1999 are not eligible for TPP. So look at that selling agent's TPP report. This is going to impact your ability to use TPP as collateral. TPP, for you guys that don't know out in the industry, Allstate is one of the unique companies that the agent gets a termination payout. I think it's 1.5% as of this recording, 1.5 times your commission base if you decide you want to give that back to Allstate, give those policies back to Allstate. You actually have interest in the commission base. Agents will take that when they buy a book, and that's part of what they use as their collateral because they have that guaranteed payout. Well, what a lot of agents don't realize is before 1999, most agents were employees. They were all employees of Allstate. So Allstate feels like, hey, we paid for this, we paid for your staffing, and we paid your salary. So these are ours. These are house policies. So agents will look at this book of business, buy a book of business from an agent that's been around 25, 30 years, not realizing that maybe 60 or 70% of those policies were written before 1999. So they don't have that guaranteed payout on those policies. That's why, again, Allstate specific. Any policies with an effective date prior to 1999 are not eligible for TPP. So you want to make sure that you look at the TPP report before you settle on a final price. Let's get back to our training. The next report that you should run is a line of business report. A line of business report shows the potential purchasing agent how to look at the total policy count by line. Now, by line simply means, some folks don't call it line items. In the captive world, they may have a line 19, line 65, line 72, line 70. In the independent world, we may say that is a policy type. So whether you call it a line of business or whether you call it policy type, you need to know verbatim, step by step, what are the actual lines or what are the actual policy types that are in this agency. I want to know my total policy count by type or line. I want to know the exact number of accounts by carrier. So as an example, maybe the agency does have 600 total auto policies, but 150 of those are substandard with Universal. Guess what? I need to know that because that means that's another carrier that I have to work with. Guys, when you're breaking this down and you're buying an agency, you really got to look at this stuff. Here's why. This is probably the biggest purchase you will make in your entire life. I've seen agents spend millions of dollars buying agencies, but they don't live in $1 million home. Again, this is probably going to be the largest single purchase that you'll make in your professional career. You want to do your homework. So going back to our line of business report, of course, it helps you determine the agency's most profitable product line. Quickly identifies lines of business and customers that have those lines. Quickly determine the opportunity areas and problem areas by line before purchasing the book. And this is something that's extremely important, guys. You need to know up front what are going to be the wins and what are going to be the losses when I get ready to buy this book. And if you don't take some time and pull these reports, it can bite you in the butt. It also helps you determine the current book's penetration and cross-sell opportunities. As an example, if this book has 2.0 policies per household, that doesn't leave much cross-sell opportunity in a captive book of business that usually only sells really auto and home and maybe life insurance. So if I bought an aged book, let's say the average person in that age in that book was 55, 56 years old, and they already have 2.0 or more products in the house, I'm not going to get a lot of cross-sells off this book. I'm probably not going to get very much life insurance off this book or financial services other than the senior products, of course, which can be very profitable if that's what I'm going after. But I need to know that up front. So what am I going to do with this book? This is a great book for retention and a great book for cash flow, but it is not a growth book. That means if I'm really looking to go out and bring in new products and new lines and new sales, this is probably not the best book for me. But if I'm looking to make this a cash flow book where I'm going to really concentrate on the customer service piece, the customer policy review piece, keeping those customers online so I've got that steady cash flow and know that for the next 10 or 15 years they're going to be around, that's a great book for this. That's why you pull that age report as well, so that you can have an idea of how long people are going to be around with you. If everyone in the book is 65 or 70 years old, they're not going to be around very long with you. Okay. Same thing here. I've watched agencies that'll go and they'll buy an agency that's been around for 50 years. Guys, I've been around 50 years. I've got a solid reputation, but most of your customers have been with you for 40 years. So now these customers are 65, 70, 75 years old. Guys, you're not going to get a lot of new sales off of that. In fact, you really have to start looking at your retention numbers because those customers are going to start to fall off the books after a while because AARP is going to come in and snatch them away from you, or there's just natural transitions that happen. You need to be prepared for that. Now, you go get a 20-year note or a 15-year note on a book that's actually going to start dropping or falling off in the next 5 years. That's not a smart business plan. So that's why you pull your line of business report as well, so you can know who's in that book, how many products or how many lines are in that book. Let's talk about some technology integration, labor, and training. Questions you have to ask. Will I need to hire more staff? Usually we recommend about 750 policies. You need one licensed staff. Okay, one fully licensed staff to service those 750 policies. That's kind of in the PNC world. Of course, commercial, it's a different ratio. If you're dealing with financial services or benefits or med sups or something, it's a different ratio. But usually about 750 to 1 is a good ratio to deal with. So you're buying a book now that has 3,000 policies. That means I have to bring on, based on our numbers, I got to bring on 4 staff. If I'm looking at that, how am I going to pay for that? Also, do I need more specialized staff? Maybe the staff that I have is great at auto and home, but now I'm buying an independent book that is strong in general liability, strong in workers' comp, strong in benefits. Am I going to have more specialized staff? And will the staff that's there transition well, or the staff I'm buying, the book I'm buying, will their staff transition well into my agency? These are questions that I need to ask myself. How much will the agency's payroll and benefits increase or decrease after the purchase? You know, a lot of agents buy books saying, oh, I'm just going to roll that book into my book. It'll be awesome. It'll be great. I'm going to have the same staff and we're just going to service more total policies. Yeah, that sounds good, but it may not work out that way. Again, you may just be so overwhelmed with service work or so overwhelmed with the total volume of customers that you have right now that you have to bring on new staff. So your payroll may have to increase. But what about those benefits? If I'm buying an agency and that agency offered health insurance, and my agency doesn't offer health insurance, I've got a decision to make. Am I going to start offering health insurance in order to bring that staff over to me? Or am I going to potentially lose that staff to competitors because I don't offer health insurance or benefits like that? These are decisions you have to look at. Will the current agency and customer management systems be adequate? If you're one of these if you're one of the folks that's paying by user, as an example, maybe you do bring on 3 or 4 new staff, but you have to figure in the cost of bringing on those 3 or 4 new staff, not just in payroll, not just in benefits, but what about my customer management systems? If I'm paying $100 per user and now I bring on 4 new users, that's $400 more that I'm paying to make sure that I've got my customer management system well. Is the customer management system that I have even good enough? Maybe it was great when I was $1 million agency or $2 million agency, but now I'm a $10 million agency. Is this going to be good enough? How much is that going to cost me? How much is it going to cost me in training? These are all questions. You can figure all this stuff out, guys, just by asking questions. You can go to your Hawksofts or go to your Applied or go to your, AMS or go to whoever, Aspire, whoever you're using, and saying, okay, I'm bringing on these users. What's it going to cost for me to add these users? What's it going to cost potentially for me to train these users? And what is my contract? What does this do for my contract? Will there be more users on new or existing technology, which I just talked about? Will the cost per user fee of existing technology increase? What are the agency's existing vendor contracts? See, what a lot of agents don't think about is, okay, I'm getting ready to buy this agency or acquire this agency or merge with this agency. And they've got contracts in place. Now, am I on the hook for these contracts? Does the contract follow the agency or does the contract stay with the person who signed that contract? Well, if I'm a seller and I'm smart, I want to sell everything, including any of my liabilities or contracts that I have. I want you to assume those contracts because I don't deal with this business anymore. This is yours now. You have to ask that question and see that up front. What are the tax implications? Are there going to be capital gains tax? And what can my tax attorney and what can my accountant do to make sure that I've worked this in the way that's best for me? New agency equipment and software purchase. Am I going to have to buy new equipment or am I going to have to buy new software? And am I familiar with Section 179 of the tax code? See, under the new Obama administration, again, I'm not a tax attorney, I'm not a tax accountant or anything like that, so talk to your legal representatives on this, your professional representatives. But according to Section 179, you can basically deduct up to $500,000 on new equipment and on software. There's a timeline of what's considered new. Let's say that agent went out and spent $100,000 on new technology, new software, new everything in the last year. Well, when I buy the agency, do I get that tax break or does that tax break stay with the person who bought the equipment? Or because I'm buying the equipment, can I take advantage of everything that's associated there? See, we just go, I'm buying $50,000 or I'm buying $100,000 worth of equipment, but we may be able to buy that $100,000 of equipment and get $100,000 in tax benefit from it. You have to know that. That's why you always want to get receipts, warranties, and any contracts that agency has for tax purposes. And you take it to your accountant, take it to your tax attorney, take it to whoever you need to take it to and go, look at this and let's see how this is going to work for me or hurt me, depending on what you're looking at there. What are some tips after the purchase, because a lot of folks will buy a book not thinking all these customers are not going to stick around. Yeah, I'm a great guy, and I'm wonderful, and I love to talk to folks, and man, this is going to be a great business decision. And then 40, 50, 60% of your book is gone within 2 years, and you've got this big note sitting out there. So you got to look at some retention tips after the purchase. Some things to think about. You have to expect to lose 5% of your first year customers when you buy a new book. That's just kind of the way the system works, guys. You have to expect to lose 5% of your first year customers. So that means you have to account for that when you're coming up with your multiple of buying this book. You have to expect to lose 10% of the book of business over a 36-month period if the selling agent stays in insurance within 5 miles of your office. Again, that's just the way the game is played. For some reason, all of our research and all of our studies support this. You have to expect to lose 10% of the book of business over a 36-month period if the selling agent stays in insurance within 5 miles of your office. We always ask for a minimum of a 2-year non-compete. Now, non-compete could have a lot of variables to it. It can be you can't be in insurance within 5 miles of my agency. It can be you can't talk to my customers at all. You can't pull down any marketing list or specifically communicate with these customers. What it doesn't mean, though, if a person stays in insurance, is they can't do general marketing, and that marketing just happens to touch someone in that current book of business. And I've seen folks try to go to court over this. Oh my God, they sent out postcards to 10,000 people, and one of those 10,000 people was my existing customer. Guess what? Everyone has a right to a livelihood. So when you do your non-compete, make sure you get with a good attorney that's familiar with contract law and put together a good, solid non-compete. And at a minimum, it should be 2 years. At a minimum, 2-year non-compete. If you really want to help your book of business, though, and really help save those customers, the selling agent should be a part of the agency's transition team for at least the first 90 days. What does that mean? That means the selling agent helps make calls to the book of business explaining the transition for at least 90 days. Remember how I told you to break your book down by your Fab 50? Here are my top 50 commission clients, and here are my top 50 premium clients. Those are the ones that you and the selling agent should be on a 3-way call with, saying, hey, Bob, this is Billy, and he's a great guy. He's buying my agency. I'm going to be sticking around here for a few months to make sure that everything is smooth in the transition, but just wanted to personally introduce you to him, personally hand that off. That's that transfer of influence, and you want that. So if you really want to protect your book of business, again, have the selling agent as a part of the transition team for the first 90 days after purchase. So you've decided you want to go buy an agency. Now you got to come up with some funding. Okay. Local banks. You can always go to your local banks, and if you got a good relationship with them, they'll probably loan you some money. The problem with local banks is they don't understand how insurance is actually valued many times. So they try to look at it like you're a restaurant, or look at it like you're a car wash, or a auto repair shop. And it's just different. We're just a different world. So local banks, if you can get a good local loan, that's great, but understand they just may not understand your business model. There are some companies out. Again, I don't recommend any one company over another company, but I will give you some names. Premium Finance Associates, PFA. They've done quite a few loans for folks that we've worked with and folks that we know. Capital Resources, again, another avenue for funding. Springtree Group. You can Google these guys. You can always go out and find them on Google. Springtree Group is another group that I know will provide funding. My group, the Williams Family Agency Investment Group, but we're not interested in loans. We are only interested in partnerships. Every agency that I deal with, I become a piece of the ownership of that agency. That's my business model. So only give me a call if you're interested in either being a member of Inspire Nation, but if you're looking for funding, or you're looking for cash flow, or looking for money, then be prepared to have a business partner as part of that if you're calling me. So Williams Family Agency Investment Group. PPC Loans, primarily Allstate agents. And then Allstate in and of itself is putting together a finance company. And again, you have to check with Allstate. I'm not Allstate, but Allstate in and of itself is putting together a finance company that I believe is going to offer bonus based on production. So as an example, maybe you've got $1 million loan with them, and you produce $1 million in new premium. Well, they may give you a percentage, 20, 30, 40% of whatever your new premium growth was to help you pay off that loan. And again, I don't know all the specifics. I don't know all the details. I don't work for Allstate or with Allstate. So get with Allstate specifically to find out what the rules are on this. But if they're putting something like that together, which the rumor mill says they are, it's a great program out in the industry. So again, these are just some of the places you can go. Local banks, Premium Finance Associates, Capital Resources, Springtree Group, our group if you're interested in taking on a partner or part ownership or giving up part ownership of your agency, PPC Loan for Allstate agents, and then Allstate Corp in and of itself. Of course, if you're State Farm and all these other folks, State Farm Bank, I know they've got some things out there. So again, it all depends on what you do and what companies you look for. These are just some of the companies that we know about. So guys, that's it for me today. I just wanted to bring up some questions that most buyers and sellers don't ask. Of course, most of them know to go in, let me look at my commissions and let me look at this. But as you learn today, there are some details that you can pull out of even those reports that will help you determine the value of this agency. And remember, the better the overall reports, the better everything looks, the higher the multiple that you should be prepared to offer that selling agent. Okay, or if you are the agent that is actually selling the book and you run these reports and you know what your agency is really worth and you've looked at all these details and you can explain these details to that to that buyer, then you become a more knowledgeable seller, which allows you to ask for more money as well. So whether you're the buyer or the seller, taking this information will allow you to better value and have a better estimate of what your book of business is worth.